Good afternoon. It's such a delight to be a part of this Commodity Fundamental Forum. IMC Chamber of Commerce and MCX have a relationship that spans probably half a decade and more. We continue to do a number of events for MCX from time to time. And one theme that we follow every time is a Commodity Market Fundamental Forum, where we cover commodities of interest to MCX, whether it is energy complex or base metals or precious metals or agriculture. We do all this from time to time. And today is Commodity Market Fundamental Forum. We're going to discuss bullion or precious metals, but more specifically gold. We have today to deliver a formal welcome address Mr. Ajit Mangrulkar, who is the Director General of the IMC Chamber of Commerce. Thank you, Ajit, for consenting to deliver the welcome address. The floor is yours.
Thank you, Mr. Chandrasekhar, and good evening, everyone. It gives me immense pleasure to welcome each one of you to this interesting Commodity Market Fundamentals Forum covering bullion, organized by IMC in association with MCX. This is a part of a series of events IMC and MCX are conducting jointly from time to time to deepen and widen the Indian commodity derivatives market. In fact, this is something which we are proud to say that we have been delivering this regularly, and our dedicated team led by Mr. Chandrasekhar and Anita and the rest of us at the chamber have been making it possible of ensuring that we do not miss out on a single one. So I thank the entire team that is responsible for this. From the time of ancient civilizations to the modern era, gold has been the world's currency of choice. Today, investors buy gold mainly as a hedge against political unrest and inflation. In addition, many top investment advisors recommend a portfolio allocation in commodities, including gold, in order to lower overall portfolio risk. As you know, gold and silver are popular investment assets as they are a good store of value and provide a good hedge during economic uncertainties. Around the world, huge investments are made in bullion because it provides attractive returns. Often, investment in gold has outperformed other assets such as equities. Gold is also known as a portfolio diversifier, safe haven asset, and hedge against inflation. As several drivers impact the market, a study of the supply and demand fundamentals is key to have a clear view about the unfolding future. There is therefore a perceived need to have a sound understanding of the market fundamentals to be able to read the market signals reasonably, correctly, and thereby make informed trading and investment decisions. This is especially important in the present times, characterized by geopolitical uncertainties, growth concerns, currency gyrations, volatile, and so on. To advance the idea how commodities will help to diversify the investment portfolio, we have organized this event. The key questions are, will gold's glitter continue, or will it lose its sheen? Why should people hedge gold price risk? What is the direction of the gold market for the rest of the year? These and related questions will be discussed by our key speakers. May I now welcome Mr. Bhargav Vaidya, proprietor, B.N. Vaidya and Associates, Mr. Debajit Saha, lead metals analyst, London Stock Exchange Group, LSEG, Mr. Shivanshu Mehta, head bullion, MCX, Mr. G. Chandrasekhar, economic advisor, IMC, and director, IMC ERTF. But before I conclude, let me brief you about IMC. The IMC Chamber of Commerce and Industry is a premier chamber of commerce in the country with a very rich legacy spanning well over 100 years of excellent service to trade, industry, and commerce. With its membership base of over 5,000 members and over 150 trade associations affiliated to it, the chamber represents and advocates the interests of over 400,000 business and industry establishments across the country from diverse sectors of industry. Through its various expert committees, we have almost about 25 of them, IMC provides policy inputs to the government, both central and state, and is continually engaged in interaction with policymakers at various levels. The Chamber is now a cradle for nurturing young talents and promoting emancipation of women through Young Leaders Forum and Ladies Wing, which have become embodiment of youth, enterprise, positivism, proactive thought leadership, and movement for women empowerment and entrepreneurship. The theme for the year is Engaging Maharashtra, Building India. IMC is a SEBI-accredited training institution for promoting commodity derivatives for price risk management. Once again, I welcome you all to this interesting seminar, and I'm sure there'll be a lot of take-home messages. Thank you very much.
Thank you, Ajit, for actually capturing the spirit of what this event is all about. Today's seminar, today's panel discussion is all about. Thank you very much. You talked about geopolitical risk, gold as a safe haven asset, and gold as a hedge against inflation. That's it. I mean, that's the spirit of what we are going to discuss. So before I start speaking on the subject of Commodity Market Fundamental Forum on gold, primarily I want to issue a disclaimer. Anita, are we going to play? Are you going to show a placard on disclaimer? Yes. All right. Yeah. Thank you. Okay. I also have to personally issue a disclaimer, which I do all the time when I discuss commodity market outlook or price outlook. The first one is I am not a trader. I don't hold any position either in the physical market or in the derivatives market. I'm a student of the market, and often I'm also a teacher of the market because I teach this subject in various institutions. And today, my friends, my fellow panelists, Shivanshu, Bhargav, and Debojit, we are not discussing price outlook. We shall not discuss prices specifically or give any price target. We are going to discuss what are the drivers of the market, what are the dynamics of the market, and very broadly, what is the direction that the market will take for the rest of the year. Okay, the next 2 or 3 quarters. I think that's the direction. Let me start by saying that, of course, gold has been glowing in 2022, and its glitter is absolutely intact. It is so unlike in 2021. Gold ended the year 2021 minus 6% in terms of value. Whereas you look at gold's performance in the first 3 months of this year, absolutely stellar performance in Q1. Actually, prices have risen by about 6%. And in April, prices have risen even further, probably by about 3% or so. But there are 2 major reasons why prices have performed so contrastingly from 21 in 22. 2 major reasons. One is, of course, a very significant rise in inflation across the major economies. Look at the United States. 8.5% is the inflation, which is a 40-year high. I mean, unthinkable for an average American, because the average inflation rate there is just about 2%. Okay, and therefore it's very high. I think across the world, major economies are facing inflation for a variety of reasons, including, of course, a rise in crude oil prices, disruption to global supply chain, primarily because of La Nina in South America, that food prices have gone up, etc. And of course, the war. For the first one is inflation, which is driving the safe haven status and a hedge against inflation, which gold is. And therefore, gold's status as a good hedge against inflation is driving demand for gold. The second one is, of course, the geopolitical risk. Obviously, Russian invasion of Ukraine, it's still continuing even today. I, for one, did not believe that Russia will actually start to attack Ukraine. I thought that was grandstanding, but it is not to be. The war is very, very real. And therefore, this invasion of Russia on United States, which is continuing even now, has created a geopolitical risk. And of course, gold is a great a great safe haven asset, and therefore people are flocking to gold. Therefore, gold currently is in very high demand, and therefore it's affirming its status in 2022 so far as a safe haven asset, and of course as a hedge against inflation. Now, no wonder we find now continuous and strong inflow into gold ETFs across the world, which is unlike 2021. In 2021, there was an outflow of gold from exchange traded funds, ETFs. But this year we are finding inflows, and therefore there are multiple bullish factors which are working and operating simultaneously. One, of course, as we know, is high inflation. Second, of course, we know is the geopolitical uncertainty or geopolitical instability, the war situation. Most important is also the rising investor interest. Because if you look at the bourses, if you look at the CFTC data that shows rising investor interest and the net long position, people are going long on gold. That net long position is also rising on the bourses. And now the latest people are talking about recession risk. Will there be recession? We don't know, but people have already started to talk about recession risk. And therefore, there are multiple bullish factors. But the bullish factors are not acting alone. There are also, I would call, not bearish factors, but actually headwinds for gold's performance. One is, of course, the tapering of the United States Federal Reserve, which process has been completed. Liquidity has been sucked out of the system. And the second one is, of course, signals of a very substantial rate hike the whole of 2022. There'll be at least 4 rate hikes, and it could be as high as 50 basis points by the United States Federal Reserve. All this is being factored in, and rising bond yields in the United States, which is actually not supportive at all for gold. And of course, high price of gold currently reducing physical demand, and there is enough evidence that physical demand is reducing. It's certainly not growing, and there is possibly a certain demand destruction. For example, there is a report which says Chinese demand down 10% in the first quarter. Okay, and that's the equivalent to about 260 tons. That's the estimation, and therefore high prices are reducing physical demand. Certainly in India, which all of us know is a very highly price sensitive market. Plus, China is facing its own pandemic-related problems or lockdowns in Shanghai and other places, etc., which is also sending out a certain negative message. And of course, the risk of a much weaker economic growth in 2022, primarily because of high crude oil prices, etc. And some gold investors, I can very clearly see, are also exiting gold. That is proven by the volatility in the gold market, that they have to pay. The stock markets have actually dropped, and therefore they need to pay margin calls, and therefore, but more often than not, people exit gold, make take that money out and pay the margin calls on the stock market. We are seeing all that. Therefore, there are bullish factors and there are headwinds working simultaneously. So, what's the outlook is something experts, of course, here will discuss. But my own sense is very clearly on current outlook. The market is so uncertain, so volatile, so dynamic. Therefore, I must say, on current reckoning, my sense is that globally, in the global market, gold may continue to trade firm. Okay, may continue to trade firm until the geopolitical situation stabilizes. We don't know when it will stabilize, but certainly until we can bet on gold, but we can't bet on when the war will end. Okay, and therefore, until the geopolitical situation stabilizes, one can reasonably expect that gold prices will remain firm. But at the same time, this Russia-Ukraine war cannot go on forever. It's already gone on for nearly 2 months or whatever, and hopefully, and let us pray for it. Hopefully, tensions should ease in the coming weeks. is my reading of the situation. And once the tension starts to ease, it will also have an impact on crude oil prices, because crude oil prices are actually driving inflation. Therefore, when tensions ease, the war tensions, it will also have an impact on crude oil, which will again start to correct itself. Global supply chains which are disrupted will obviously improve. By August, September, the northern hemisphere agriculture crop harvest will start coming into the market, and all this can negatively impact investment, inflation expectations, and therefore all these are factors all of us have to bear in mind. And in that event, obviously gold's fortune will start to recede, in my opinion, as the environment for gold would turn less supportive. It is very highly supportive today, but it is likely to turn less supportive in the months ahead. And once stock markets begin to improve, then as all of us have seen in the last 20, 30 years, less committed gold bulls will obviously exit the market very, very quickly. Now, it's very tough to time this market, almost impossible, because there are a lot of uncertainties, and these uncertainties are so utterly intractable, and therefore one can get a reasonable view, one can state a reasonable view that we must be ready for continued firm prices in the first half of the year, and of course a possible correction in the second half of the year. But having said this, we must also look at the Indian scenario. While we talk about the global scenario, we must look at the Indian scenario. Obviously, our markets very clearly mirror the global market, and therefore, what is our price? Our price is nothing but the dollar price of gold, plus the taxes, that is the import duty, etc., plus the logistics cost. That is our price, and of course the exchange rate, very clearly. Therefore, I am convinced, and there is enough anecdotal evidence, that high gold prices and erosion of the purchasing power in India due to high inflation is leading to a certain demand destruction in our country. There is certainly very limited growth, or there's a significant slowdown in the demand growth as far as India is concerned. At the same time, high prices are actually encouraging scrap sales in India. Rupee, the currency, is a very important factor as far as gold prices are concerned in our country, and I expect the rupee to weaken vis-a-vis the US dollar. My expectation is that the rupee will weaken, possibly go towards 79-80 levels in the months ahead. And rupee, a weaker rupee obviously pushes the rupee price of gold here in the domestic market, and therefore Indian consumers, as and when the global price of gold starts to correct in dollar terms, we as Indian consumers may not get the full benefit of the fall in dollar price, because our rupee can weaken. But that is what happens all the time. There is nothing which we can do. But at the same time, I also see in India, the investment demand will certainly moderate. Our investment, once the market starts to fall, our investors will stay very cautious, and investment demand will certainly moderate with the price correction. And therefore, I think with this, I will stop. I have a couple of more points to make, but I think I've already probably exceeded my time by a minute or so. I'll now invite Bhargav Vaidya to share his thoughts. Then I'll go to our friend Debajit, and of course Shivanshu. Then we'll come back and have another round of sharing of views. Bhargav, the floor is yours. Only one point that I want to make is, to all the panelists and to all the participants, we need to conclude this event, today's event, by 5:25, latest 5:30. But 5:25, let us target, just in case it is going to extend. No, we have more than 1 hour, so don't get worried. It's not even 4:30 now, but I just wanted to mention to all the panelists. Yeah, Bhargav, the floor is yours.
Yeah, thank you. It's very difficult to add anything after you have started.
अरे यार.
Well, next time I'm going to request Anita that Chandrasekhar sir should be the last,
Okay, okay.
so we can at least say something. As you know, I like to always use this word, and was rightly used by Mr. Ajit, that gold is store of value.
Yes.
And please invest into it or take a position into it, taking this into account. Don't expect it to be something like a Bitcoin or like a subscription to a share of Infosys. And it will never become something what people in my age group will remember, Unit 64. So it is not going to give you a lot of loss. And I get nervous when gold gives very good return. As because it's against its inbuilt character. Yes, there are times in which, as Mr. Chandrasekhar was saying, that at times during geopolitical tension, there is a war premium or there is an excessive premium which comes in, which should taper out over a period of time. And this is the reason why you have some period where you have fantastic profit. Taking that apart, gold will always give you steady returns and it will store value. And when I say store value, you can say that it will look after inflation in a good way. If, as Chandrasekhar said, that you can talk about some other precious metal, in India, if you talk, there's another precious metal, which is poor man's gold, which is silver. And which is something, of course, you have to listen to experts like Chandrasekhar Sir and Debajit and others. Shivanshu cannot give price another outlook because of his present employment. Personally, you can ask him. Is something which is volatile and can give you fantastic return. And whenever I speak, I tell people that you can invest in gold and forget about it. You don't have to look at this portfolio, you don't have to monitor it. But if you take silver, you have to be careful. And from time immemorial, whenever you bought gold and even forgotten, over a period of time, it has given a return. Maybe today there could be few people who might have done gold investment at the time of the peak of Corona, and you would get out of it. You would not be in the profitable range, but don't worry, you'll be in it. And that's the only period for which maybe people will take some time to get it. Otherwise, is that, you know, the premium on gold in India, when I looked at this market and when it opened up in India, was 60%. And today the tax is 13%. Then also people are not at a loss. But when you look at Indian prices, yes, that is one very important aspect which you have to see. If there's a sudden correction in the taxation angle and the duty angle, there could be a correction in price. As in the last budget, they have reduced it by 2%. We see so many seminars being organized. I think last week I participated in one or two, which were talking about reduction in duty if you get it from say UAE or maybe in Australia. So all this may just reduce the duty premium, but intrinsic value will not go down. And over a period of time, I don't see this is going to hit in a long way. Again, when you look at gold, we have one more fundamental thing, that for majority of the population in India, that is the only asset they hold apart from cash. And if you look at the forex asset or one which is linked to the international market, that's the only asset which they have, which is gold. So it is very important that we look after this asset with these people in long term. And I would be very, very happy. I'm very happy now that we have more than a single, instrument to invest. I would like to draw the attention just now to everybody that if you're looking at ever investing, there's one very, very nice instrument which has started, which is sovereign gold bonds, which is a Government of India initiative, which looks after two things: that the purity of the gold, which was a question in past. I think the steps which the government has taken, the trade has taken, and the BIS has taken, the purity is almost getting solved. But then also when you are buying a sovereign gold bond, that is an instrument which will guarantee you that there is no question about what type of document you are holding, and getting into it and getting out of it, the price, there'll be no negotiation, and you are very, very transparent. My friend Shivanshu will say, don't worry, in some time I will give you an exchange where you can do spot and you can sell on it. And hopefully we will have this deposit receipt even for sovereign bond, and we can trade on your exchange. But that is on planning stage. But at present, this is a very good instrument. And when people are looking at it, you may look at this instrument saying for long term, yes, I'm very, very safe. I'm investing in the direction which the government and the more intelligent economists think that I should invest. And I'm getting all the returns which I felt I should get of gold. And if I exit from it, maybe I'm usually able to buy a jewelry if I am fond of it. So that is very good thing which has happened. And earlier I used to always, talk about it. Why gold is very good. It can be liquidated at any point of time. It is only during this period, 2 years ago, I realized that jewelers also were not opening their house. Because of Corona, the shops were closed. In past, I could go and walk into any villager, goldsmith, and say, I want to give this gold. At middle of night also, he will charge something. He will just do his touchstone of my ring and give me my money in half a minute. And for first time, that fellow doesn't want me to come to his house. So what do I do? But the trade had developed. In India, it's a very, very small investment is also possible. Alternative investment. And I started talking about it more after that. Yes, this is the most liquid thing which you have, which we call digital gold. Maybe some regulation should come into it. And in that format, it was liquid 24/7 at all point of times. And all the exchanges are also trying to bring something which will be physical and in small units. I don't know whether it'll be as small as digital, but which will be able to get a proper satisfaction to India's planning to have a small investment in gold and in a safe way. So any structured format which people go in would be very good. So go for first preference, a regulated product. Second preference, a known outfit. Third, you know your jeweler and gold, BIS recognized well, fine. Then it's very, very okay. But then a regulated product or a government product is always double safe. The experts around which will be speaking more on this than me, and it works. Now, when I look at the market, India has always been a very, very consistent demand for most commodities and gold. And for some reasons, we have a compulsory buying of gold for festivals and for marriages. There is one festival which is coming very nearly, and I like to mention it just for
3rd May. Yeah.
3rd May, we are talking about Akshay Tritiya, which was not listed by us or in time immemorial. It is a very good marketing which is made, and which has made it a successful marketing thing. But the underlying current is that on all auspicious day, we can invest in gold. There were days like that gold marketing is perhaps much stronger than silver. So some of the silver marketing days historically are taken over by gold, and we find more on it. And Devajit has written up a very good book on it. I don't know if most of you would have read it. Otherwise, you will put it somewhere on net. More and more people can read about it. That we used to say on the Dhanteras, we used to first buy silver, but now the gold marketing has picked up, and it's like a compulsion that we buy gold on a regular basis, which is our system of SIP, which we call Guru Pushya Nakshatra or Pushya Nakshatra. So this inbuilt in our system. So we spread our risk and we invest. And it has made the work very, very light for Shivanshu. In the email which I received, I think I just touched up on this point, where I saw one line which said, why should gold be hedged? Now, if I'm an investor, I do believe I can buy it and forget it. I may sometimes just hedge it if I feel I've taken it at a different time, or if I'm a very intelligent person like Devojit. A jeweler, if his main income is from jewelry, he should concentrate more on his designs and making charges. And as we just discussed just now, that there could be a geopolitical tension or any other war premium, or suddenly a movement on certain fronts which will grossly change, even taxes, which will grossly change the market price of the commodity. And for that purpose, a hedging instrument on an exchange is very, very important. So if I'm a professional, then only I should get into derivative instrument. Just like we say that you buy fully, you buy a delivery contract and hold it, I'm not worried. But when I'm in a geared derivative instrument, I should understand my risk if I have underlying risk, and I should know my margin calls and walk into it. I think a lot of hard work has been done by all the exchanges and even the institution like which Chandrasekhar was saying, which says that when you go into a commodity market, if you're going to a derivative market, this is what we do. Say if a person like me, I'm buying something on exchange which is delivery based and I'm paying the full money, I have no risk. But when I'm going to a derivative instrument, yes, or I have underlying risk with me, I'm not worried because I can straight away negate. And for that thing, I may get a very good insurance by buying an option, or I may just, if I bought my gold, I may just sell it on the exchange or any other OTC market. So I spread my risk. So yes, derivative instruments can be very, very usefully used by people who are in this trade or jewelers who have underlying risk. And on that basis, this market is much more matured in India now than what it was maybe 20 years ago. If I see that what is the main change which we saw from 20 years, yes, we have a far more mature derivative market, and I can even hedge my duty risk on exchanges just now, and I can sleep, which was not the position then. So I'm definitely thinking that we are in a very, very matured bullion market now, or rather the entire commodity market. And I think I'll stop for now. I like to listen and study more. And in case we have something on second round, we'll discuss about it.
Yes, of course. Thank you, Bhargav. Everybody knows you are a very modest person. Okay, but you are a repository of knowledge and experience.
Thank you.
Anyway, thank you very much for sharing these thoughts. These are important thoughts which market participants ought to think about. All of us should start to think about. I'll now go to Devojit, and I'm sure with his experience and background and his communication skills, Devojit will talk about the market outlook, market direction, say for the rest of the year. Yeah.
Thank you, sir. Thanks for the opportunity. And as I also wanted to put a disclaimer that I don't trade in any exchange or any derivative products or anything on gold. So whatever I am saying, it is a totally neutral view. So first of all, what Mr. Chandrasekhar already said, so I don't have to add too much on that, what driving the gold price or the gold, because the factors are already he mentioned. So I just wanted to add a few numbers. For example, if I start with the commodity exchanges, so as per our data is concerned, as per our analysis is concerned, it will give you some idea how people love gold at the time of economic crisis. So in the month of March alone, the derivative contract across 4 major global exchanges, that is COMEX, CPSG, and our own MCX. So these 4 exchanges together, they have contributed, the volume has increased by 54% compared to the previous. So it is constituted, say, about more than 26,000 tons. So it's a huge number. So this kind of number we cannot see in a normal market condition when there is no fear, no crisis, etc. So it's a similar way as Mr. Chandrasekhar mentioned in the very beginning, the gold ETF. So it was a nearly 200 tons of outflow last year. Now, only this 4 months till date, this ETF already added more than 300 tons in the kitty. So this shows the amount of interest investors have, not only interest, the amount of conviction that investors have, that at the time of economic crisis, this is the instrument that can withstand against all odds, that can protect their wealth, etc. But till now, this investment, this gold is usually used as a hedge against inflation, hedge against interest rate. So in my understanding, what I personally believe, that this is the two things. That is why people actually get interested in gold. India's case is little different because India's love of gold is completely different from the rest of the world. So if we look at the global perspective, unless or until this crisis is on, until the crisis is on, there is always chance that gold will continue to attract the investor sentiment, investors. But as Mr. Chandrasekhar, I actually wanted to mention, but he already mentioned that US 10-year Treasury yield already is showing a kind of improvement in last 1 month. That is only one thing that is actually having a direct correlation with the movement of gold price. As I can't talk on the price, but it has a direct correlation against the price. So this 10-year Treasury yield showing massive improvement in last 1 month. So that is one headwinds that we have to keep in our mind going forward. Now coming back to if I talk about the physical demand in the market, so last year we have observed a huge return. I mean, huge recovery in demand, especially India, China, and across the South Asia or global, or safe to say across the Asian and Middle East market. And obviously China, India were the largest contributors, and understandably so, because a lot of marriages took place which were postponed in 2020, but took place in 2021. And same as the China's economy was the first one to recover from the pandemic that time. And people are out on the street. The Chinese tourists, they could not travel. So that money got invested in the precious metals as per our studies concerned. So those things, even the Thailand, if I say a lot of outflow observed in 2020, because people in Thailand, there was a huge queue in front of a jewelry shops in Thailand to sell their gold because they had no money to survive. So those kind of things happen, and it was a huge outflow it is close to more than 100 tons in Thailand. So those things actually, and then they returned 2021, they returned back again. So those things we have observed at the time of crisis, how gold performed, because this is the only currency we have apart from the fiat currency. So that is the best thing happened during that time. So 2022 going forward, we are not so bullish like last year, simply because the price is extremely high. So at this price at $19 odd, it is very difficult even for a physical buyers. Everybody is waiting, but as per if I look at the prices and the behavior of the buying, so basically, for example, in India, we purchase gold basically for jewelry, festival, etc. So at that time, at some point of time, those buyers will come back. So now at what price it will come back, at what position, when what gold will be traded, it is very difficult to say, because currency is a big factor in India. So that's what we always see. Gold is continuously going up, but it is not the case if we look at in respect of the US dollar. So there are years in US dollars, in US dollar denominated gold delivering a negative return, but whereas in Indian context, it delivers a positive return. So any 5 years time, I don't think if someone holding gold for 5 years time in India having any negative return in their investment. So it is because of the duty factors and apart from the currency, apart from the currency factor. So in total, what I could say that investment demand will continue to remain in the Western world. So because we have already observed recently, if I say the last month's number, for example, a huge number of gold being exported from Switzerland to US. So that's things happen. We have seen the similar sort of things, around 80 odd tons of gold exported from Switzerland to US. So similar sort of things we observed during 2020 crisis, and the volumes, as I said, this suddenly the volume of comics is gone up exponentially. So that kind of thing happened in 2020, and similar things we observed in the month of March, April. Also, it must continue, but we have not yet got the data. So those things combined, what I can say that investment demand will continue, but and the physical demand, I say, physical demand means physical jewelry market in the in Asia, that will be not as good as the last year. But here, two things I just wanted to mention here. One is that this ETF, if I consider the total ETF position at present, it is roughly coming around 3,500 to 3,600 tons. So that is as good as, it is close to the 1 year's demand to fulfill the. So I always care, as an analyst, I always care when this, ETF holdings gone up very high, because any kind of positive, any kind of negative news, any kind of negativity comes to the market, there will be a huge selling. There could be a huge stuff. And this ETF investors, they sell very heavily at those point of time, and price normally fluctuates very fast. We have seen last year. It could happen again this year. Say for example, war stops, inflation comes in control. Anyway, US Federal Reserve is going to increase the interest rate. So any negative news comes to the gold's way, it will have a very, very sharp impact on the price. So sharp impact on the demand. So that will be a biggest concern. I always care of that high ETF holdings actually. So that is one has to take care of. If you see at the SPDR, it is available every day in newspaper. I personally request just look into this data. You will have a quite amount of understanding how the price or how the demand is behaving. And secondly, I just wanted to mention only for the Indian investors that whenever you are putting money on gold, be specific. If you are an investor, there are options that what Mr. Bhargav Bhai mentioned, that ETF, digital gold, sovereign gold bond, these are fantastic. Why I am saying that? Because when you are investing there, you are investing only on the gold price. But moment your intention is to buy jewelry, you are paying 15-20% on the design, making charges, etc. So you yourself is making the gold more expensive. So whenever you are buying jewelry, buy jewelry for adornment. And whenever your intention is to investment, please invest in these instruments. Even I know some commodity exchanges also coming with even MCX having some small denominated gold contract. If it suits you, it is also good. If it suits your investment purpose, it is also good. So my point is, when you are doing investment, keep having a very good understanding what you are going to do and do accordingly. So this is my opening remark, Chandrasekhar sir. So
thank you very much. Thank you, Debajit, for sharing your thoughts. Wonderful point, well taken. We'll of course have another round of opportunity for all the panelists. There's no doubt. I'm now going to invite Shivanshu, who heads the bullion desk, precious metals desk in MCX. He is actually in the middle of all the action, thick of all the action, and I'm sure it's going to be very interesting to get to know from Shivanshu his view on the market outlook. particularly, I'm sure, is going to answer the question, why should you hedge your price risk? And what are the various avenues in which one can hedge one's price risk? Shivanshu, the floor is yours. Yeah.
Thank you, Chandrasekhar sir, and my co-panelists, Mr. Bhargav Vaidya, Mr. Devajit. I think a lot has been said in the first three sessions, and the paraphrasing of what gold as an asset class means to the rest of the world, which has been proven over decades and centuries, has been highlighted very well by the panelists. So amid all this, the role of an exchange like ours, I mean, it becomes incumbent upon us to meet the expectations of all constituents of the market, whether it is retail participants or it is physical bullion traders and dwellers, which represents the hedgers, or it is the traders, speculators, and the arbitrageurs. The whole composite pie is what we see participating on a leading commodity exchange like MCX. So price discovery is an important role that an exchange plays amid all this. It also plays the role of a platform for risk management, as Mr. Chandrasekhar just pointed out. It certainly is a delivery resort in terms of quality assured and exchange good gold. It also, through various products which are designed by the exchange under the regulatory aegis, it attempts to offer a variety of contracts for the retail segment as well as the other segments like hedgers that I mentioned, so that they can partake by way of trading, by way of investment, by way of risk management, or for the purpose of giving and taking delivery on the exchange. I mean, if you look at the past few years, gold, whether you call it a hedge against inflation, a hedge against geopolitical risk, hedge against economic turmoil, against the unpredictability or the weakening of other currencies, fiat currencies globally, we have seen it all packed into the window of last 2 years or so, 2.5 years. That is the beauty, which began in 2020 with the rise of COVID. And you saw how all of these things, which I just said, they unfolded and resulting in gold going from 38,000 to 56,000 in a matter of few months, from March to August, September 2020, and silver going from 35,000 to 77,000, if my memory serves me right, in roughly the same period. And then we continue to see gold and silver where they are, even though we see the dollar index holding above 100, and we see the war all around, recessionary risks, and now the rate hikes which we are anticipating. Of course, if I'm, and Devajit can correct me if I'm wrong, I believe there was consolidated level rate cut during the COVID times of 26 basis points by the major countries. So you can well imagine the kind of ups and downs we have seen recently and how gold has performed. With no prejudice to any outlook or any view going forward, this is important to understand what I'm going to now talk about via a brief presentation, primarily focusing more on the retail segment, how our product offerings can help meet your trading investment needs on the MCX. With your permission, sir, I'll turn on a quick presentation. Yeah.
Please.
Is the screen visible, please?
Oh, perfect.
Yes,
Okay.
Yes.
Right. So we'll begin with gold. We'll touch upon silver. What really is gold? Is it an international currency? Is it a safe haven investment? Is it a very highly liquid asset? Is it a portfolio diversifier when it comes to other asset classes like equity, etc., or bonds, fixed income? Is it a hedge against inflation? Is really gold a combination of all of the above and more? And the thought to yourselves, talking about the factors which really affect gold fundamentally. Of course, it is a physical industry, so the physical gold demand and supply, inflation, global crisis, economic downturns, ETF, hedge fund activity, as Devajit pointed out, the value of the leading currencies versus other currencies, central banks and the role they play, the real interest rates, and other policies of banks relating to the money market and the financial markets. It has an impact on gold. Talking about silver, silver is essentially an industrial metal which has uses from transformers, switchgears, electrical contacts, conductors, wires, etc. Photography has come down with the digital age coming in. You always have silverware and jewelry. You also have the solar energy linked applications of silver, which have really been picking up of late. And of course, the medical applications continue as they are. Very often you see a lot of factors, silver. In fact, in one of the Bullion summits I participating in, one of the very interesting statements a panelist made was that gold, when it decides to go up the stairs, it takes the elevator, and when gold decides to come down, silver jumps out of the window. Silver is a very volatile metal, as they say, and it follows the influence in terms of its prices from a variety of factors. Silver and copper also are highly correlated because of their demand side to a large extent. I mentioned to you the industrial demand sectors. The precious metal aspect remains the same as with gold. The economy remains the same, and to currency and policy measures remains the same. Now, why are we discussing gold and silver? Why does it really matter? Is that a scientific, study of various portfolios, and there have been various studies, but I'm currently referring to the one done by IIM Kozhikode in April 21, wherein various portfolios have been compared, and the presence of equity and commodity at various percentages. So Sharpe ratio being high is an indicator that it's generating for you return which is in excess of the risk return available at that point in time. Realize that any portfolio which has gold, to the extent of around 13 to 14% has given you a reasonable return, and yet it has kept the risk low and the Sharpe ratio high at the very top. Of course, there can be various percentages, attributions, depending on the risk appetite and depending on the time period in history that you're talking about. But broadly, this principle remains that a presence of commodities not only increases the return, but reduces the risk, overall risk of the portfolio. Talking about MCX briefly, we have 99% plus share of the precious metals derivatives market. Globally speaking, the rank of MCX is number 4 and number 5 in 2020 calendar year in terms of gold, the volumes of gold traded, and in the case of silver, it is at number 3 by the same logic, which is the volume of silver traded. The international correlations, which is important for you to sketch whether contracts will generate for you an important aspect, which is the international price movements or not. It's very important from risk management point of view, also from the returns point of view. So we have a correlation with domestic as well as international markets of above 99% or thereabout. And in the first two tables, you can see the volatility which gold has seen over the years. So 2020 was an annualized volatility, which you saw was 19%. And similar figures are given on the right side for silver. The volatility you can see was 41% during the same time period, and continued to be 26% the next year. So if you're a hedger or a jeweler who hedges on MCX, you're able to safeguard your fabrication margins, which you're actually in the business of, and safeguard yourself from the base price movements. Who really is the hedger here? It is basically the importers, the bullion traders, jewelers, and even the exporters. And the prices are used as a benchmark for value chain and end consumer pricing, reference price. And the beauty is that these prices are a composite of international gold prices, the exchange rate, the import custom duty changes, which were being referred to earlier by one of the speakers. I think Bhargav mentioned it, and the prevailing premium and discount at the local level. So all these four things reflect in the prices of gold at MCX. So any change, the sensitivity is there in the contract to capture. So this has been proven time and again. Whenever the disparities have increased in the domestic markets, they have actually met of delivery at our platform. This happened, for example, in 2019 when the duty was increased in gold in the month of August. It also, we saw highest deliveries. It also happened in 2020 itself in silver. If you remember when the silver went to a discount of more than 5,000 odd rupees in the domestic market. So because the spot to futures integration takes place in a contract which reflects all these things, and which is compulsory delivery in nature, it is participative in terms of secular participation from all segments. Spot to future integration. Timing of the market is such that you're able to capture the entire workers' movements from 9 in the morning till 11:55 at night, Tokyo, Shanghai. Now coming to the products that we have on offer for our retail participants and others, we have a gold 1 kilo contract. We have a 100-gram contract in futures. We have a coin product, which is the gold guinea, 8 grams. And as Devajit was mentioning, we are the only exchange in the world which has a successfully running deliverable 1 gram contract. We were the first ones to launch this. And I'm happy to share with you that it has seen deliveries of more than 60,000 1 gram coins over the past 2.5 years or so of its existence. And that, in a sense, is a world record to have this type of a contract. Trade in 1 gram, take delivery of 1 gram gold. It's certified exchange good delivery with a quality assay certificate as well. So coming to these, after these four, the silver products that we have the 30 kg product, 30 kg bar. We have a smaller 2 contracts, silver mini and micro, which are 5 kg and 1 kg respectively, and which use the silver 1 kilogram bar for delivery. Here again, I'll share with you that these were introduced in 2020 in March and June respectively. We have seen more than 100 tons of 1 kg silver bars delivered via MCX. So to that extent, we are seeing retail participation of by way of investment also being met by these 2 silver products and the 1 gram gold product. So this provides a sort of, we have an electronic system called ComRisk, which is a receipt management system like a DMAT. You are able to hold it electronically. You're able to accumulate it electronically like an SIP, and you can take physical delivery as in when you want. The convenience of transaction is very much there. The liquidity of the order books, and you are able to do the trading by margins, so better capital efficiency with all these. We have recently launched, as yesterday, 2 days back, in fact, we launched the Gold Mini options, which is the 100 gram option product. It has given robust first day and second day numbers. We did 95 crores of turnover yesterday. And we are hoping that this product gets, it gets sort of to play the role for the small to medium dwellers as well as to the small and smaller investors who would like to make this part of their portfolio and who would like to use this as a fine-tuned hedge when it comes to the dwellers. So there we see trying to meet that need gap. The silver mini options we have launched months back, that's also seemed to be doing well. We have these 4 option products: gold 1 kg, 100 grams, silver 30 kg, and silver 5 kg. Options can actually help you be competitive on the profit side while ensuring that the downward risk is completely insured, completely taken care of. That is the advantage of option products. We have recently launched the index product, what's called the Bulldex. This again is highly portfolio-based item because it can help investors keep commodities, especially a precious metal basket-based commodity in their portfolio, because it has a weightage of 66% gold and 33% silver. I mean, making it 100, 66.6 and 33.4. And whenever there's a sectoral play available, if somebody wants to maintain this index, they are able to do it. They are able to hold it in the portfolio. This is something which recently we did, and it has shown some good results as well. And it's a cash settled product, lower denomination, so it really helps in terms of investment. There's some of the advantages, like I've already mentioned: cash settlement, portfolio diversification, etc. So we continue to engineer and re-engineer our products for the retail segment, which is the main audience today, and that is our commitment as a market leader, and we continue in the future as well. With that, I'll wind up this session, and we'll remain, open for questions.
Thank you, Shivanshu. As always, very precise presentation, informative presentation. You have captured what MCX has to offer to the market and to investors and to, of course, other value chain participants like dwellers, etc. Thank you very much. Very, very interesting. We'll have another round of discussion, and I'm going to share one particular thought with all the panelists and of course with all the participants. Over decades, having tracked gold and other commodities, I've always found Indian investor, look at Indian investor, is always comfortable with a rising market. And when the market prices keep rising for whatever reason, he happily invests. And then, of course, once the market has risen sufficiently, sells his and they will not be rising forever. There will be a fall, there will be a correction. But my own reading of the market, and I've spoken, I speak to thousands of people all the time. Many people who are savvy investors rising forever. And I want to bring back to you the year 2001. From 2001 until end of 2012, for 12 long years, gold prices increased double-digit year on year. And in those 12 years, there was a certain intoxication amongst investors in gold, saying that gold prices will never fall. They'll keep on rising. Because for 12 years, you got used to double-digit price rise. January 2013, I remember I started to write saying gold prices are there is an imminent correction coming in gold prices. Okay, every week I would write consistently. I've written Jan, Feb, March. I remember in February, March, mid-March, there was a conference, gold conference at the Bombay Stock Exchange, where gold price at that time was $1,660 an ounce, and here it was 32,000 rupees for 10 grams or whatever, around those levels. And I talked about an imminent correction. People laughed at me saying, "Yaar, Chandrasekhar ko malum nahi hai gold market, kabhi girega hi nahi," whatever. Then you look at the record, April 14, 15, 2013 was a huge collapse. At $1,660 became something like less than $1,300. That's the kind of collapse we've seen overnight. And our price, 32,000, became 27,000 or even lower. All right. So this is something which I, as a layman with no trading interest, I could see that coming. And I forewarned people through my columns. Lot of people lost very, very heavily during the time. And therefore, the point I'm coming to is gold prices, gold is a store of value, all that is fine. But when you are an investor in the gold market, be prepared for ups and downs in the market. More important is, I feel, that more than in a rising market, in a falling market, people can make more money. If you are a savvy bear market operator, you can end up making pots of money rather than in a rising market, because a rising market rises very, very slowly, whereas a falling market falls precipitously, very sharp. And there, if you are able to play a bear market, then I think there is enormous opportunity for people to make a huge profit. But going long is very easy. All that you need is some money. Going short needs courage. Going short needs deep insights into the market, product knowledge and market knowledge. And therefore, I think as a part of our awareness and training program, and particularly I'm addressing Shivanshu, MCA, that I think we should now start talking about how investors can not only benefit from a rising market, but they can also benefit from a falling market. They don't have to get scared. But for them, it is important, it is critical that they have adequate product knowledge and market knowledge. And possibly one such situation can happen in the second half of this year, is my reading of the market, subject to, of course, the war situation concluding a lot more peacefully. And therefore, to play a falling market, we need to know the drivers of the market, the dynamics of the market, and have the courage to play a falling market. I think these is a thought I just want to leave, but I'm sure both Bhargav and Debajit will have some views to share. And obviously, I'm sure Shivanshu also will have some thoughts. Any further thoughts, Bhargav, on this? Or any other thing that you want to mention about the gold and about gold investment? Yeah.
I remember your speech in BSE Central Hall in 2000. And
you have an elephantine memory, Bhargav.
नहीं maybe बूढ़े हो गए जो वहाँ थे, but anyway we remember that.
Yeah.
And that hall always gives a fantastic feeling of investment.
I love it. I just love it.
Yeah. All the exchanges in the country, we say, might have grown larger, but it has its own charm. Yeah. Anyway, that's a part. As you rightly said, that a learned investor can go in all the markets. And what I was trying to say, and maybe all of us have been saying, is that for a layman, you can just invest and forget, then gold is store of value. But if you want to be more active,
yes,
the first is little bit of product knowledge is necessary. And I try to address this whenever I'm speaking, that please, a derivative market is not for a layman. You have to be a learned investor. I stay away, I am a layman. I don't understand, or it has to be given its own time. Without giving it a proper time, you should not get into it. Then it is very, very good. If you say, I think the amount of products which exchanges in India have, and the type of related products which they have, they can give fantastic arbitrage opportunity to an intelligent player. So if it was not a public meeting which you are having, and if you are having a special seminar for some professionals or students of the subject, yes, we can talk about so many things.
Yes.
But caution, please don't jump into it. Well, understand your risk,
Absolutely.
put your stop loss, and however friend your, Sibanshu would maybe a benefit of us. Market is nobody's friend and regulator is nobody's friend. The positions will be in big problem in case it is not done. I just saw one question on the chat here, which somebody was asking, how safe are sovereign bonds? I think they are as safe as Indian currency you think, or all the exchanges. The most safest product it is.
Right. Because there is a sovereign guarantee.
Yeah, it's issued by government of India. So if you, as long as you keep a currency note of India in pocket or hold your bank account in rupees, you are safe. And it are linked to spot prices. And gold is the, I think, Debojit, you correct me if I know, only commodity which I know, which if I see over more than 150 years or something, have been only for few days in backwardation. It has always been in forwardation. So, two things you can say that how it is. As Chandrasekhar ji was selling, that you can play the market. I think how we can play backwardation and negative interest rate. If one of our two colleagues who are more intelligent than me on this subject can throw a little bit of light, it may be interesting to some professional investor. Debojit or Shivanshu, whoever can talk.
Any thoughts? Yeah.
Yeah. So what, in line with what Mr. Bhargav ji was telling, so my personal view is that when you are going to derivative market, it should be backed with the underlying, or what I mean that whatever the physical stocks you have in your hand, if you are dare enough to go, only then you can go. Otherwise you should not go on a naked, and you should not put in a naked position there, because it is for professional traders. So yes, what Shivanshu mentioned, that there is nothing wrong. If you are a long-term investors, you can buy. I am a big fan of that particular product, that gold, micro, guinea, all these. So those things you can accumulate. You can accumulate through ETF, digital gold, etc. I am a big fan of digital gold as well. But unfortunately, I cannot trade for professional reason. So my sincere request is that first understand the derivative market and go whenever you have the underlying, because this is the project designed because of that only. So then you can obviously participate. And secondly, gold is a one currency you have, which you can spend, which we can liquidate anywhere in the world. So there is no currency better than gold. It is possible that it is hypothetically, I am telling, it is possible that there will be no value of US dollar tomorrow, but this is the one currency you can we will carry always the value of the money actually. So back to you, sir.
Thank you. Shivanshu, your thoughts, anything you want to add?
I think what Bhargav said, that one should proceed with caution, as if you're dealing with any trade as such, it should be regulated platform. It should be, you should always be armed with knowledge that what are your rights and entitlements. If you're entitled to a contract note, you should be, which is verifiable. The trade is verifiable on the exchange website. You should know that. Deal in exchange approved, quality of goods. And the beauty is that here you have a variety of contracts, and if your aim is to accumulate, so we are also the regulator. That way, there must be a lot of positive thought and a lot of praise, from our side, that so less of a time frame. We've seen so many pending items cleared, so many pending contracts. First, futures was always there. Options came in. Indices have been launched. We're seeing the way for the overseas investors being paved. Likewise, the spot contract, what Bhargav was mentioning, is also, it would come as a segment or as a separate exchange. Both routes were allowed. And you will see soon that the spot contract presents itself as an accumulation item, the electronic gold receipts. On the international exchange, where we are partners in the IIBX, already the BDR has been successfully created and traded in the test environment, in the real environment, in the trial run. I'm sure that would be positive. In the meantime, our retail-oriented products, which are gold petal, for example, gold guinea, they present a very good opportunity because liquidity of order books of an exchange is a big advantage of a derivatives exchange as opposed to other products like ETF. They don't have the liquidity as such. I don't mean to discount anything, but here the weighted average, sort of costing, all those efficiencies, margin, all those will come in. So for somebody who wants to accumulate, this can be an ideal product.
All right. Yeah, thank you very much. Very interesting. There is one question that I saw, which is a better option, crypto or gold bond? Any thoughts, Bhargav? Unmute. Anita, unmute.
Yeah. I think I could not unmute myself. Now I could.
Yeah.
They are poles apart. One is North Pole, one is South Pole.
Absolutely.
If sovereign gold bond is safe, store of value, crypto, I don't understand, but I know it is risky. And I can ask a question, because let me learn something. Sivanshu, just a little bit of your idea about international exchange, how it is possible for a normal person to participate, and the size of the BDR I can trade in. What is the minimum investment you feel at present? You are most innovative on your small size product. Are you planning something to be there also, which I can pull up later on, or it is going to be very large?
Okay, so just for other people's benefit, Bhargav's question is now pertaining to the India International Bullion Exchange, where MCX is one of the partners along with other MIIs. First time ever, all 5 MIIs have come together and set it up. I must mention my partners NSE, BSE via INX, CDSL and NSDL. So initially we have, we have been permitted by the regulator. Recently we started the trial run in the real time environment, wherein the bullion depository receipt of 1 kilogram nomination, around 15 have been created and 2 have been traded, 2 kg. So Bhargav, yes, initially in the T+0 contract, we have started with this one. We would be also doing T+2, that is the deferred contract, and the 100 gram would also come in, and so would the silver 30 kg. And you said that whether the retail aspect, like if there can be any ETF based out of that place, which is an international jurisdiction as the IFSC. So yes, I mean, as we accumulate liquidity as it grows, maybe this type of a product can be also well suited towards that objective.
And how long can I hold this GDR, or is there a load? ETF I have a load, or I can just hold this GDR and forget it for 10 years?
So I think if you're under the LRS, whatever money is permitted for you to
no. Yeah, I have done it a legal investment, and I am holding a GDR. Is the exchange forcing me to liquidate after some time the way we have it on the other exchanges, or I can hold the GDR, or there is a load, or I can hold the GDR for 10 years, or there is a load?
No, so to answer your question, there's a depository element there. So if you are able, like, the depository company, if you are compulsory supposed to have an account there as well when you open the exchange. So if you have electronically converted it, the best of my knowledge, there is no limitation on you to reconvert. But if you want, I can confirm.
Yeah, it will be a very good thing if I can hold for a long period. Till I want to liquidate. Very, very good. But there could be something.
True. I agree. Point taken. Yes, Debojit, your thoughts on that question? Crypto, which is a better option, crypto or gold bond? Very quickly.
See,
I'll share my view after you.
Very quickly, I am not in favor of any kind of this. I don't believe this crypto story actually, because it's a very, very risky one, because it is actually your eyes are flaring up because of the rise. But when it falls but double the speed. So it is a very, very risky. In the other hand, sovereign gold bond, it is a very safe product. There is no risk involved at all, unless and until there is a sovereign default, which is unlikely to happen in a country like India. So that is my short answer.
I must mention my very personal view, nothing to do with any organization. that sovereign gold bond obviously is a sovereign guarantee given by the government of India, and therefore it's absolutely safe. Crypto is a virtual currency. Nobody knows the underlying for a crypto. Number two, there is no regulator for the market. And any market where there is no regulator is a ground ripe for some scam or the other. Of course, people will say we use blockchain technology, transparency, all that is fine. But when you have a market, there has to be a regulator. And if there is no regulator, the risk is very high. That is how I would look at this market.
Just I want to.
It has performed very well. A lot of people say that they have made money, etc. But personally, I would be extremely wary of these markets where we don't know what the underlying is and where there is no regulator. Yeah, go ahead.
So just a quick point, please wait for some time, because in certain countries they started gold-backed cryptocurrency. So
True,
if
true.
it is, so let us come to India, and it is better to do that, because you have a gold as an underlying, as your store of value, against that you are trading.
Correct.
So those kind of things, if it comes to India, then I think it will be good.
I agree. I think okay. We are actually coming close to 5:30. It's 5:25. I was just wondering, any final thoughts, any final comments, Bhargav, that you want to share with the participants? Same for all of us. Any final comments on gold market outlook or bullion market outlook for the second half of the year?
Oh, I am bullish. I am not bearish.
Okay.
But as I said, that if any derivative instruments you go in, please be educated about it before you do it.
Absolutely. Point taken. Devajit?
I am little bearish in the second half of the month. So anybody, patient investor, can wait some time before investing.
I agree. Same case here. I'm not going to ask Shivanshu about this. I think we obviously, for obvious reasons. As I said earlier in my presentation, very clearly, war and how the war pans out over the next coming weeks will actually determine how prices are going to behave. And I believe the war will not go on forever. It's a matter of weeks. And then therefore, maybe could be May, maybe it could drag on till June, pata nahi. But for the second half of the year, I think once the war concludes in whatever manner it is, I think there will be a correction. But we can't time when the war will end. I think that's not possible. But very broadly, the second half, one can expect a fairly decent correction from current prices. So I think with this, we are coming close to the end of our discussion. I think we've done fairly well in covering different aspects of the market, different drivers of the market, the dynamics of the market, and our panelists have also given good advice and good guidance to the market participants. Before we conclude, we'll have a formal vote of thanks from one of the senior most members of the IMC Chamber of Commerce, former president of the IMC, and currently the co-chair of IMC ERTF, Mr. Tanil Kilachan. Tanil bhai, a formal vote of thanks from you, sir.
Thank you, Chandrasekhar, and thank you all the participants who have given us such a very interesting outlook as well as insight into the gold bond market working. I think MCX and IMC have done several such projects together on risk management, and this is part of the continuing series of events which we hold together with MCX, for which we are very thankful. The broad exchange from London and Mr. Saha's input, I think, was very valuable, because London traditionally has been the leading gold market and has been setting the pricing. So I think some of the advice which he has given, particularly be very careful when it's a falling market because you can lose a lot of money very quickly. I think that is something which we should all keep it in mind. Other than that, I would only hope that along with the stock exchange and equities market, the gold market should also have a very large participation, for which the role MCX is playing is really very encouraging. With this, I would like to propose a formal vote of thanks for all the speakers who have spared their time and given us insight into the working of the gold market. Thank you all.
Thank you, sir. Thank you very much. Yeah. So with this, we will conclude, and we are getting very positive messages on the chat box saying fantastic event, etc. Thank you very much. I want to thank all the participants for taking part. And let us conclude this event now. Thank you very much. God bless you all. Take care.
Thank you. Thank you, everyone.
Thank you very much.